Lee, I'm from CoinDesk, the host of two shows, First Mover at 9 a.m. Eastern, All About Bitcoin at 3 o'clock Eastern, every day live. And I'm really pleased to be here to participate in this panel on derivatives, the big picture. We've got here a cool lineup. Had the pleasure of interviewing some of these folks. We have Josh Lim from Genesis Global Trading, Darius Sit, QCP Capital, Julian Koh, Ribbon Finance, and Michal Koonin, Paradigm. Thanks, guys. Just curious, I always like to get to know the audience in beautiful Barcelona. How many of you are beginners to the crypto world? Yeah, none. How many of you are developers, advanced founders? Wait, is anyone all right, who's or considers himself advanced in crypto? And in between? Seems like people aren't raising their hands. Guys, wake up! Welcome to Barcelona. Thank you so much for joining us. All right, let's get to this panel. First of all, perhaps you can introduce yourself and tell us a bit about your business company.
Yeah, hey everyone. Hope you can hear me. So my name is Joshua Lim. I work at a company called Genesis Global Trading, which is a sell-side financial services company. So what that means is we help a lot of sort of institutional firms that are getting into crypto or actively trade crypto sort of access the markets. We create products and services that they use that are mostly tied to liquidity or yield. And we're pretty active across all different ecosystems, but Avalanche in particular. We do everything from sort of bilateral OTC trading, which means us facing a counterparty directly and offering like options or forwards, all the way to sort of lending and borrowing. So creating, offering yield on assets or lending those assets to people, all the way to sort of like on-chain activities, sort of like what Julian created with Ribbon. So I'll leave it there.
My name is Darius. I'm the founder of QCP Capital. We are a team of about 80, mostly based in Singapore. We do three things. We run a global spot OTC desk. We also run a large derivatives desk with a big focus on options. We trade options on exchanges, OTC, as well as DeFi. And the last thing that we do is we do quite a bit of ventures as well.
Hi. Hello. Hi, I'm Julian. I'm one of the co-founders of Ribbon, which is the first and largest structured products protocol in DeFi. We have about $250 million of assets now, and I think we just expanded to AVAX like 2 months ago.
Hi, I'm Michal Koonin. So I'm one of the co-founders of Paradigm. Paradigm is essentially the largest institutional liquidity network for institutions to trade crypto derivatives. So what that means is when an institution wants to enter into the derivative crypto markets, it's really hard for them to source best liquidity. So what we're doing is we're providing a single point of access for trading at as many different venues as possible. Counterparties can trade counterparty to counterparty, so that eliminates a lot of the execution risk. Instead of going onto the screens and executing leg by leg, we take out that workflow and automation process.
Awesome, thanks, everyone. I want to perhaps start off with Julian, because you run a DeFi protocol that runs derivatives. So what problem do you seek to solve that in the traditional world may not be as readily available as it is in DeFi and in crypto?
I think the products that we actually offer are pretty common in traditional finance, but historically, I mean, options in DeFi were like non-existent for the last few years. So options really just took off maybe a year and a half ago, and I think we were the first to like package options into a yield product for users. And in the backdrop of a lot of yield farming and like shitcoin emissions really going down in the last year, I think our product has sort of become a bit more, has sort of taken the spotlight of where you can find yield in DeFi.
Mm-hmm.
Maybe I can help Julian shield a little more on the significance of his product. So they were the first DeFi options vaults in the space. Previously, before them, options was a very difficult thing to trade in DeFi, mainly because it's a non-linear product. And DeFi lends itself very well to linear products, right? So AMMs, money markets, DeFi mechanisms without an intermediary were good for that. So they were the first to do it, to put options and trade it scalably on DeFi. So, and that market has grown from zero to more than $1 billion from April last year when they started. So I think it was very, very significant. And after him, a lot of other DeFi options vaults has come up, and it's become, I think it's the first time we've seen options become a big thing in DeFi. So, so it was a very, very significant moment for the rest of us as well.
I'll add to that too. I mean, so I think the big kind of catalyst for the growth of options in DeFi space is the fact that yields have been compressing for more than a year across all types of products in crypto, right? If you think about sort of the opportunity set in yield farming and also just the futures basis, right? Which means like if you look at where the futures curve of crypto assets like Bitcoin or ETH versus where the underlying spot assets are trading, that spread has compressed a lot, which means the opportunity to extract sort of yield from that trade has really disappeared. And we feel it a lot in sort of our own traditional lending business, where we take in assets from lenders and lend it out to borrowers. And a way to offset that, I think, for a lot of our counterparties is to search for this sort of yield in option space, and it's a little bit more sustainable if you can think about it that way, because it doesn't really create emissions or create inflation. It's really like a transfer of risk from someone who doesn't want it, someone who's willing to give up upside on whatever asset they're holding, to somebody who does want that risk. And in that process, there's some sort of premium transfer that happens as part of that option trade.
Yeah, and we're excited to be working with them and help them build the workflows and the automation tools. A lot of the institutional market makers that are providing liquidity for these DeFi option vaults are also...
Do you often find that liquidity is a challenge for a lot of different exchanges, and how do you step in and help with that?
For the DeFi exchanges? Yeah, I mean, I think that's one of the main problems that we're solving, especially in certain market conditions. The screen markets will definitely thin out, and when our clients are looking to trade more sophisticated structures, such as multi-legs or even delta neutral, combining options and futures in the same transaction, we make that very simple. And because it's trading counterparty to counterparty, they can find one price liquidity for that full size that they're looking to get.
Here's another question for you. What do you think, what are the pros and cons of AMMs, automated market makers, versus order books? Maybe you can start with you, Josh.
So I mean, one of the biggest innovations in crypto has been this idea of like an AMM, where there's some formulaic way of determining a fair price for a transaction without the sort of intervention or sort of discretionary pricing of a dealer or some person who's pricing that risk, someone with balance sheet and the ability to commit capital. And I think that's something that crypto has taken, or DeFi has taken, like in enormously varied directions. Like in particular, I think the innovation around AMMs has opened up like the ability to trade all kinds of more complex things, like options or tokenized payouts of various sorts that would generally be hard to price like by a dealer. Obviously, you still have to have some market participants that are arbing like different AMM pools just to make sure that prices do stay in line with kind of economic reality. But it does create a lot more opportunities for retail investors to commit capital to things without actually understanding how to model and price things out.
I mean, I think AMMs are great innovation for DeFi, but there are limitations as well. I think there are very clear inefficiencies in terms of how they price, because there is no intermediary. You're relying on arbitrages to put the price back into marketplace, or rather market spot. And also the collateral and margining does not lend itself that well to a product like options, right? So there have been AMM for options in the past, but not scalable because of collateral management, margin management, and liquidations. So actually the way that the vaults did it was to eliminate that problem. So you have actually traditional market makers coming in to take on the risk off-chain, but everything else is settled on-chain. So I mean, Julian can probably talk more about this, but The price discovery is on-chain, going to be with Paradigm. The settlement, the collateral management is all done on-chain, settlement as well. Just that the market makers are the ones taking on the risk off-chain. And I think that has become a very scalable and a much more feasible way for dealing with non-linear products in DeFi.
I'd be curious, Julian, for you answering that question, because in creating Ribbon, you had to make a decision on whether to do AMM or order book. So walk us through your decision-making process.
Yeah, I think historically we have seen a lot of people try AMM for options, but it's just really difficult to price these options on chain. So we just decided to create like an auction. So we say, instead of having like a contract, say, okay, we're going to sell it at X dollars, we just open it up for like 10 minutes and say, whoever wants to buy it can pay whatever price for it. And yeah, that sort of worked a lot better than having an AMM specifically. So we do use like auction mechanisms and a lot of other DeFi native mechanisms for price discovery.
You want to add, Vicky?
No, I was just going to say that resonates so much with the institutional world, because an auction is essentially an RFQ, and that's the workflow that our clients are very accustomed to. So the alignment in our two companies, I think, working together is truly there. So yeah.
And I suppose you're more tailored toward institutions versus retail investors, correct?
Yes, exactly. Yeah, I mean, options in general we think is more institutional based, especially for the larger size trades going through our platform. But yeah, we're also looking to diversify. You know, future spreads are also one of our biggest pushes this year, and I think that's also going to diversify the client segmentation on our platform as well.
Darius, you mentioned there are some limited products in crypto. Right now, the focus is on perpetuals, futures contracts, maybe some options. Do you think there will be a future where interest rate swaps, bonds, equities, that'll get into the market?
So that's not the future. A couple of guys are already trying it. But it's challenging because, like Josh said, the DeFi space is doing something very different from that's something that's never been done before. Meaning that you're trying to trade non-linear products, complex products, without an intermediary. So that's a problem that the banks and the FIs and TradFi have never had to solve before. I mean, they are the intermediaries, they are the ones facilitating settlement, facilitating price discovery, and taking risk. So this is very tricky in DeFi because without an intermediary, dealing with, there are a lot of issues that you have to deal with in terms of margin trading and leverage, right? But I think, the way Ribbon has innovated and found a way to do that, I think there will be more innovations as to how we translate traditional risk into DeFi. Let me just give you an example, right? If you look at all the AMM pools, there is actually embedded optionality in the impermanent loss. The impermanent loss that is not actually impermanent. I mean, it's actually like negative gamma. It's actually like selling options when you put it there. But most people don't realize that. So I mean, being able to monetize that and understand that there are actually traditional risk structures embedded within DeFi. But the tricky part is having to execute, making that tradable for the retail guys, right? So even now, we see that the DeFi options vaults have hit a bit of a plateau around a billion plus in total. I think the difficulty is when DeFi users come on, they're used to AMMs, they're used to money markets, one click, one APY, that's it. They come to a vault page and they see 10 different vaults, they don't know where to start, right? So it becomes a bit of a challenge. So I think two parts, right? One part is understanding the inherent risk and then structuring it for the DeFi market. And second part is also making the product easy and usable for the DeFi users. And we are starting to see, to answer your question, we are starting to see a lot of these guys trying to innovate and create this exotic options on DeFi, interest rate swaps on DeFi. The problem is that it's still a little bit clunky, so I think we're all together figuring out how we make it less clunky and then more scalable.
Yeah, I would say a lot of the innovation is focused on sort of taking a very complex problem like trading options on chain and sort of unbundling it into different sub-problems that are relatively manageable, right? Sort of the idea of like quoting RFQ, like soliciting prices from a lot of people that know how to price that product. what's the best way to do that? Like every sort of DeFi options vault has a different mechanism for doing that. Some of them, like Darius was saying, are entirely off-chain, like negotiated privately in chats, or some of them are, built on some sort of web app that connects to something on-chain. But that's one problem that's being solved, and sort of a lot of innovation concentrated there, just the UI aspect of that. And then there's like the settlement aspect, right? Of how do you represent an option on chain? Like how do you actually settle it? How do you represent the buyer and the seller? How do you collateralize it? The settlement mechanisms around that, that's all very complicated. Like Darius saying, a lot of things are fully collateralized now, which in a world where there's a lot more institutional participation, and obviously like if you look at the trend of DeFi just generally, it's like this idea of collateralizing everything, right? So it's like make everything collateral, make everything usable and productive and capital efficiency as high as possible. So like that's going to be a big trend for this DeFi options as well. People don't want to have to fully collateralize every option trade. So maybe you create an option and now you can reuse that for something else. Or netting the risk, right? That's another problem. Netting risk between different options exposures that you have or perp exposures that you have, and then even just beyond that, like netting your DeFi portfolio with maybe your centralized risk portfolio, right? Your on-exchange risk, your counterparty risk with bilateral OTC dealers, things like that. Like there's very fertile sort of grounds here for a lot of new projects to kind of build on, I think.
Yeah, I would just like to highlight something that Josh said and something that Julian said as well. We are really just at the cusp of it, because the DeFi option vault market has grown from, again, $0 to $1 billion, and it's on very, very, very simple, one week long vanilla options. So this is as simple as it gets, and it's already $1 billion TVL on that.
Right.
So as we move on, you have many ways of expanding this. You have longer tenors, you have different types of options. Like Julian just built on AVAX. You have different chains, more exotic structures. I think the sky's the limit. So we are really at the start of it only. So it's really exciting.
Well, Julian, maybe you can go over some of the products that you offer on Ribbon and how you're hoping to expand those offerings.
Yeah, I think by far our most popular products are selling calls on ETH or selling puts on ETH. That comprises maybe a few hundred mil of TVL on our platform. But as Darius mentioned, it's like the most vanilla products anyone could ever have thought of. So I think now we're sort of just exploring about how do we use the collateral more creatively. For example, we launched this vault where I can stake my ETH on a different platform and bring that over to Ribbon and use that as collateral. So I'm like getting yield in two places at once. We're sort of exploring that kind of thing a lot more.
Mm-hmm. So I just want to add one show point here, right? So even though it's a very simple product, it is probably the highest yield you can get in DeFi. Because like Josh said, the way DeFi is going, there's a lot of inflation, there's a lot of yield compression. Every AMM prints tokens as to provide the yield. The price of that eventually comes down due to inflation. But the DeFi options vaults, you're actually monetizing the underlying volatility. So the source of the yield is external, and not like a self, yeah. I mean, it's not what do you call it? Insular. It's external. You're externalizing. You're getting yield from external source instead of getting yield from DeFi tokens themselves. So it actually presents the highest yield in the space, and I think that's a sustainable way for DeFi to expand as well, by getting yield sources from outside.
Mickey, I'm curious where you see a lot of challenges for crypto exchanges or your crypto clients, and how you guys try to solve their problems.
For the crypto exchanges, for the clients on crypto exchanges, yeah, it goes back to what our core is, finding best liquidity. As the market matures and people are looking to trade more sophisticated trades, I think creating automated workflows to eliminate, riskless execution, and coming to Paradigm for that source of liquidity. Also, as more exchanges kind of begin to offer options, it's nice to have a single point of access to go to for one source of liquidity rather than going to each individual CeFi exchange. And then, from the CeFi exchanges, we will be the bridge to the DeFi option vaults, all in one source of liquidity.
Julian, I'm curious about your thoughts on being centralized versus decentralized.
I think we are very focused on decentralization because other than obviously like the core ethos of crypto, I think it's also like a very strong strategic like business advantage. It means like anyone can use our products on day one. Other smart contracts can plug into our products. You don't need sort of all this legal overhead of bootstrapping an exchange. So yeah, I think we have committed to that path, and it's mostly like for business reasons.
How decentralized are you? Because there have been incidences where DYDX, for instance, in December, they went offline or they had to halt their services because they were using Amazon Web Services, and then that went down, and so there was a blackout for everyone. So just how decentralized are these DEXs?
So when we built our products, I think we were very interested in making sure that like if our services go down, if you're a sophisticated user, you can still go to the contract and do the thing that you wanted to do. So DYDX doesn't let you do that, but I think we were very adamant on making sure that there are these like backup ways of using the protocol, even if like AWS goes down or the internet goes down or something.
I mean, I'll say this, like, I think in option space right now in DeFi, like, you still need to have some degree of centralization. I think the reason is that not every person who participates in these option protocols, like, understands how to price options, or maybe has, the calculators that you need set up to be able to do that, or even, like, has a sense of where the market is pricing implied vol on some random asset, right? So what you need is, like, some central, group of dealers, like large market participants that is very active in that market for that asset, whether it's like ETH or Avalanche or whatever, and understands the market dynamics for that asset and can price sort of the right, maybe it's realizing 100 vol, but because of this new product, it's going to realize less vol, right? So you need to price that lower, and it'll be lower yielding, but that's like the fair price. Maybe you only know that if you're a big dealer and you touch a lot of different counterparties and you talk to everyone and you're trading a big book of ETH options and Bitcoin options and all the other options out there. And so that's just for now, right? That's just for now. Not everyone can be an options market maker in the world, right? Maybe everyone can be like a participant on a DEX for spot trading because you kind of know where the fair price of something is. You just go look it up on Binance or whatever, right? But it's different for options, and there's not that degree of transparency and sort of ease of pricing. So I think that's kind of the reality of the world. But it could change over time, and I think retail does have the advantage of you don't have to. By retail participants, I mean like normal people that aren't working at a big financial services company. Like you can still tag along and benefit from someone else who is pricing it correctly by just participating passively and contributing capital to that. And that's like, I think the biggest innovation of DeFi is that passive participation aspect.
But I would just add to that, I would say this is one segment of DeFi that the TradFi guys understand. And I think it's one segment where they are more willing to participate. Meaning that the TradFi guys, they look at a lot of the AMMs and the way the risk is managed there, and they're like, I'm not sure what the hell this is, and not very familiar with it. But they look at the DeFi options vaults and they see, hey, those options. I know what they are. I know how they work. And so we actually have seen interest from banks, FIs, who see this as something interesting that they can sort of segue into the crypto space. Of course, the issue for them is still, a lot of AML issues and whatnot. But there have been efforts by several regulators to create a space a bit like AVE-ARC, where these DeFi options vaults and other structured products can be traded on DeFi and they can participate as well. So to me, I'm very excited about this because I see this as the way TradFi enters DeFi. And then you see an explosion from there. So we're all working hard to make that happen as well.
Are you hearing from more banks, more institutions who want to experiment with DeFi?
Yeah, so, not sure I can name the banks, but a few prominent banks have been looking at this, and a few regulators as well. I think in general, we see a trend of interest in DeFi. The war in Ukraine has probably exacerbated this. Right? If you were a Russian holding rubles or even Chinese holding renminbi, I think you'd be a little bit shaken. Your assets could disappear.